Who should become the master of the problem and defeat the problem and succeed?
श्रीमान अब्दुल कलाम जी के निधन के समाचार पूरे देश के लिए और विश्व की वैज्ञानिक आलम के लिए एक बहुत ही दुखद समाचार है।
Dr. Kalam was immensely popular and greatly admired. His warm humility and simple ways endeared him to the one and all.
Great nationalist. He loved India. He was a patriot. He wanted India to shine. Everything he did in his life was because of that. He wanted India to be very powerful.
Well, the nation today is mourning the death of former President APJ Abdul Kalam, an ace scientist and inspiring educator, a reluctant politician, and above all, a human being who inspired a generation with his humility and selflessness. Hi, Netara.
And perhaps that's why we saw both the President and the Prime Minister go beyond protocol to pay homage to the former President. He, of course, did pass away in Shillong yesterday, doing what he loved, imparting knowledge to students.
Well, he had once said, and I quote, "Look at the sky, we're not alone, the whole universe is friendly to us and conspires only to give the best to those who dream and work." End of quote. His words, his life and the exemplary example he set will inspire us forever. Well, here's a look at the other headlines that we're tracking this Tuesday evening. Wall Street opens in the green for the first time in 6 days as the US Fed kicks off its two-day meeting. The CNBC survey shows the market still expects a rate hike in September, but the majority is dwindling.
The sell-off in Shanghai continues a day after the biggest fall in 8 years, despite unprecedented government intervention injecting liquidity into the money markets.
Maruti zooms in the first quarter. Revenues jump 17% and margins expand thanks to higher realizations. HDFC also on target in Q1, but profits grow mere 1.2%. The stock slides in trade.
Punjab National Bank takes giant strides towards arresting bad loans. Asset quality stabilizes after 9 quarters. Union Bank also shows some improvement, but Syndicate Bank and Bank of India still in the woods.
Back from the brink, SpiceJet starts to fly high, posts the highest ever profits in a quarter of 71 crore rupees in Q1. Lower fuel costs and higher load factor boost the bottom line.
The M&A watchdog slaps a 420 crore rupee penalty on Hyundai, Mahindra Reve and Premier for anti-competitive practices.
The split is now wide open. The Shiv Sena attends a meeting of the opposition parties on the land acquisition bill, remains firm that consent clause and the social impact assessment must not be diluted.
A fresh twist in the Maggi legal battle. The Maharashtra food regulator opposes the central food regulator over the permissible amount of lead content.
Sahara's mutual fund faces imminent shutdown. SEBI cancels the company's registration, says the promoter. Sahara's sponsor is nothing but the alter ego of Subroto Roy.
Relief for the mining industry. The centre set to notify levy of district mineral funds in 2 weeks. Sources say only 50% of royalty will be earmarked against the earlier proposal of 100%.
All of that and more coming up for you in just a bit, but let's go straight to the market action. 10 minutes in the red and then 10 minutes in the green. That's how volatile the markets were today, but the trading was restricted to a narrow band, and eventually we ended with marginal losses. The Nifty lost about 20 points. It continues to hold above 8,300. The Sensex lost about 100 points as well, with the index continuing to move towards the 27,000 mark. Mid-caps falling in tandem with the blue chips. The mid-cap index ending the day with minor losses. But a quick check on Wall Street, where shares have opened in the green after 5 days. Gains are getting paired as we speak. All eyes on the U.S. Federal Reserve's two-day meeting, which kicks off later tonight. CNBC's Steve Leesman joins us with the details of that exclusive CNBC survey, which shows that many are expecting a September rate hike even now, but the majority seems to be dwindling. Steve?
The question going into this meeting is it the meeting before the meeting where they raise rates? And the CNBC Fed survey says, yes, it is, but just barely. If you take a look at the timeline, which is the average dates for each of the major Fed moves expected, the September 2015 is still the median call, but it is slipping, as you'll see in just a minute. The balance sheet is expected to decline beginning in June 2016. That's a month earlier. And the terminal rate, in other words, when the Fed finally gets to the final place, is now seen as the second quarter of 2018. That was pushed later by a quarter. And that average terminal rate now just 3%, which I'll point out is a lot closer to the Fed staff zone forecast than the average FOMC member is. Now to that issue of the rate hike and September slipping back just a bit. 52% of our survey respondents say it is September. But what you can see is the number who are picturing or saying it's September has come down quite a bit, and they have moved more into a December camp. Still thinking, by the way, you can see that in that number. They skip over November, where there's no meeting, to say, you know what, when the Fed hikes, it'll be a month with a press conference. And so you can see was in September has now moved a little bit ahead. Still, the median call is for that September rate hike. We asked people, if it doesn't happen in this year, why won't it? And for all you math bugs at home, we asked people to pick two reasons why. Weak inflation is the number one reason. Weak growth is the second one. And weak foreign growth, that shows up as a major worry throughout this survey, is overseas growth. In fact, it's the number one threat to the U.S. expansion. Finally, I want to show you this chart of where the forecasts have been on the Fed funds rate. First, you can see the average funds rate expected for this year has gone down below 50 basis points. For next year, 1.41. But look all the way on the left of your screen. What you see is how much tightening has been baked out of the equation for the market. Back in August 2014, the prediction was for a 90 basis point Fed funds rate by the end of this year. So what's come off of that? About 40 basis points gone. Looking at 2016, there was an expectation for a 2% Fed funds rate. Now 60 basis points has come out. Why has that happened? Well, you have weaker expectations for growth. Also, you've had this stronger dollar. So what I think, way to think about this is the Fed has somewhat leaned against the effects of the stronger dollar and lower inflation by pushing ahead the time or pushing later the time of the first rate hike.
Thanks a lot for joining us with that analysis, Steve. The expectation is the rate hike could only come in September, and perhaps we're going to see 2 rate hikes before the end of 2015. Across the Atlantic, a quick check of how the European markets are trading at the moment. We did see a good opening on Tuesday as investors are keeping an eye on the slew of earnings as well as the start of the FOMC meet. So sea of green, look at the British FTSE up by about 0.7%. The German DAX and French CAC also very comfortably in the green. On to China, where the Shanghai Composite closed almost 1.7% lower today. That's adding to Monday's 8.5% loss. Over the last 3 sessions, that index has lost more than 11% of its value. Chinese authorities made further efforts to stabilize the market following the Monday slump. That included an injection of funds into the money markets by China's central bank. Also, China's securities regulator has launched an investigation into Monday's market sell-off, suspecting dumping.
China stocks are sending a sell-off this Tuesday after yesterday's 8.5% collapse, though the declines were limited in the afternoon session by a reaffirmation of Beijing's commitment to continue buying stocks and after the central bank pumped more liquidity into the money market. It was a highly volatile day, nonetheless, not unusual in China's unruly stock markets. Had seen both indexes lurching between losses as deep as 5% and gains of more than 1%. More than 1,500 stocks dived by their 10% daily limit. Elsewhere in the region, Indonesian stocks extended declines to a third day, falling by more than 1% to the lowest since March 2014. Foreign investors were net sellers on expectations of a weaker rupiah. The currency has declined, remember, nearly 8% year to date, making it the second worst performer in emerging Asia.
Sri Jagaraj, appreciate you joining us with the wrap of the Asian markets. Now, rural China, especially farmers, are the worst impacted due to the fall in the stock markets. Many have seen their entire wealth being wiped out. CNBC's Eunice Yoon reports from Beijing that people are starting to lose faith in the government's intervention.
Far from Wall Street in the financial capital of Shanghai, farmer Yang Cheng saw his dream of getting rich disappear in the stock market. Yang began investing in 2008 from the remote town of Panzhihua in southwest China. He lost everything. I feel so hopeless, he says. Traditionally, average Chinese shun the stock market as an unreliable investment. But that changed in 2014 when the government started promoting stocks as part of a grand plan to open the economy and expand the role of markets here. Yang put his savings of $164,000 in the bull market and invested his relatives' money too. He bet it all on one stock, a local mining company. When the market climbed to 4,000 points, I realized the risks were pretty high, he says. However, public opinion on government policies affected my judgment. But what doomed him was margin trading. His brokerage convinced him to try it. He borrowed $1 million, more than 5 times his portfolio. When the market hit a low point in early July, his brokerage forced him to liquidate. In an ironic twist, he now owes roughly the same amount he originally invested.
Yang isn't alone. At brokerages across the country, hundreds of thousands of ordinary investors have been caught off guard by all the volatility. Many of them have suffered catastrophic losses.
Yang bought a train ticket to Beijing. Like many investors, he traveled to the offices of the leadership and the stocks regulator, but was turned away. I don't know what to do. I trusted the government too much, he says. I won't touch stocks again. Returning home empty-handed, the full weight of the family crisis sinks in. I have ruined everyone in my family, he laments.
Stories of despair there coming in from rural China, and this is what happens when you see bubbles being created and people trust the fact that the government will intervene and try and pull things through, but that's clearly not working at this point in time. Now, crude continues its downward movement. Brent trading below $53 a barrel. WTI NYMEX has slipped to $47. Gold prices are in the green, but still hovering around $1,100 an ounce. So that's the latest there as far as commodity markets are concerned. But it's time now for Earnings Corner, and let's start things off with Motan, India's largest car maker. Maruti Suzuki's reported numbers for the first quarter of FY16, and the auto giant has seen strong operational performance, which is in line with estimates. The numbers got a boost from a strong product mix, lower costs and forex gains. Sonia is standing by to take us through the details. Sonia, good start to FY16 for Maruti.
Well, it was a strong operational performance for Maruti yet again. The company reported margins at record highs, and in fact on the revenue front as well, it was a growth of 17% because of very strong volumes that the company reported to the tune of 13.8%. Domestic volumes were strong at 12.9%. Export volumes too surged by almost 22%. The margins for the company rose 420 basis points year on year at 16.3%, which was a record high, and the realizations for Maruti have improved improved year-on-year due to a stronger product mix, lower raw material costs and higher forex gains. However, the profits were below street estimates because of lower other income and higher taxes. The profits grew 56% but below street estimates as the other income fell about close to 30% and the tax expenses doubled. The tax rate stood at 28% versus 25% odd. All in all, good performance. The earnings does justify the valuation premium on the stock.
All right, Sonia, thanks very much. And that stock was higher by about 0.5% today. But more earnings. India's largest mortgage lender, HDFC, reported Q1 numbers in line with expectations. Net interest income grew by nearly 17%, but profit growth disappointed the street, rising only 1.2%. This is dividend income dipped by over 80%. Margins also disappointed. But in what comes as relief for HDFC, asset quality remained stable, with non-performing loans staying put at 0.69%. The stock, though, today was under pressure. But let's listen in to Key Mystery on the company's plans as far as the QIP issue is concerned.
We have no plans to raise capital. We will fund our business to debt. So effectively our capital adequacy is very adequate. We have no plans to raise capital at this point of time. We are doing a QIP issue which we talked about and which we got the approval in the annual general meeting this year. So the QIP will be more in the nature of debt. Along with the debt, along with the bonds, there will be warrants which will be attached. The warrant holder will have the option, if he wishes, to come to us at the end of a certain period of time, which is still to be finalized, and convert one warrant into a share by paying money at that point of time. And the share will be converted at a premium.
Ms. Kiki Missy taking you through the HDFC Bank's quarterly performance. Staying with the banking space, PSU banks have been waging a war against bad loans. Some are winning the fight, but others continue to struggle. Today, Punjab National Bank and Union Bank saw some stability in NPAs, but Union Bank and Syndicate Bank still in the woods. Ekta Batrana joining us with that summary. Ekta, let's begin with PNB. Clearly, after a 2-year-long gap, we are seeing that war against NPAs paying off.
Well, let's start with Punjab National Bank. That one was, in fact, the big performer in terms of the PSU banking space and in terms of asset quality. After 9 consecutive quarters of worsening of asset quality, they managed to improve this quarter. The gross NPA was down 1.2% on an absolute basis, and the gross NPA ratio also improved to 6.47%. The slippages were down to around 2,800 crores versus 7,400 crores Q1Q. The management guidance was also quite positive. They said that gross NPAs in Q2 should be slightly better than Q1. The NII was down 6.3%, concentrating on other parameters. The profit also was down close to around 50-odd%, but really the street concentrated in terms of the asset quality. Union Bank, that too was not a bad set of numbers this quarter. The slippages, which have been reducing for the past 3 quarters, is what really helped in terms of street sentiment. The slippages were down from 968 crores in Q2 of FY15 to 1,500 crores this quarter. The gross NPA was up 8.5%. The ratios worsened by 57 basis points Q1Q. The NII, however, was flat this quarter, and the profit relatively less of a decline as compared to the others. So the profit was down 22%. But disappointing numbers from Bank of India. The NII up 8.5%, but profit down 84% year-on-year. However, it was a Q1Q recovery since it was a loss that they incurred in the previous quarter. The gross NPA was possibly what spooked the street. It was up 141 basis points Q1Q. And if you look at it from a year-ago perspective, it's up 350 basis points. Slippages lower Q1Q at 4,700 crores, but it was still elevated. Lastly, Syndicate Bank, that too reacted negatively to its numbers. NII up 4.5%. Profits looked uninspiring with the decline of 37%. Provisions weren't really the problem. It was up only 2.8% year-on-year. But it was the taxes which jumped 61% year-on-year in terms of an outflow. And the gross NPA, if you see, did worsen this quarter for them, up 59 basis points on a Q1Q basis.
Thanks, Ekta, for joining us with that summary. Before we go any further, here's what the MD and CEO of Punjab National Bank had to say about the first quarter results, especially on being able to arrest the fall in asset quality.
Recovery this quarter has been 1,143 crores as against the previous quarters 1,385 and the corresponding quarter 750 crores. In every sphere, our recovery division as well as the credit monitoring division, which has been strengthened to a very large extent, had delivered pretty well. And the guidance I would like to give for Q2 will be that it is going to be slightly better, if not excellent. NIMs for the previous quarter, as you saw, it was 2.79%.
And the markets like what they heard. The stock was higher by about 5%. That's PNB for you. Now, the airline's color may be red, but one thing that SpiceJet's new promoter Ajay Singh has managed to do is pull the airline out of the red. The cash-strapped and heavily debt-laden airline, which was on the brink of a shutdown, has managed to post a solid set of numbers in Q1. Profits are over 70 crores versus a loss of more than 124 crores in the same period last year. And this despite total income falling by more than 500 crores, coming in at just over 1,100 crore rupees. Well, CNBC TV 18 Sindhu Acharya caught up with the chairman and managing director of SpiceJet, Ajay Singh, and asked him about some of the measures that the airline was taking to ensure that its earnings improve even further, and whether the company was in talks with any foreign airlines or investors to sell a stake.
Need to work, as you said, on structural costs, the most sticky costs. We need to renegotiate a lot of contracts. We need to bring down that cost. We need to bring down all the costs which are not fuel costs, so that this profit can be sustainable in the longer run. We need to continue to work on the revenue side in terms of increasing our yields, increasing our loads, increasing our ancillary revenue pieces. So it's a constant sort of effort to ensure that there is a sustainable performance by SpiceJet in the years to come.
Please tell us if you're in talks with any strategic investors, whether it's international airlines or any other investors, for offloading some stake in SpiceJet and getting in some funds.
There have been some talks. We are in absolutely no hurry to offload any stake whatsoever. The airline is doing well. We believe that it is currently extremely undervalued. We want to focus on rebuilding this airline and ensuring that it comes up to a level where it can take advantage of the enormous opportunities that the country is going to present.
Are you at least in talks with Gulf carriers for some sort of an interline arrangement which gives them a sort of restricted access to India and gives you restricted access to new markets?
Well, those are strategic dialogues which we'll continue to have. I don't want to say whether they are with Gulf carriers or otherwise, but whatever commercial arrangements that we can find which benefit SpiceJet in the long term, we will certainly keep looking at them.
Well, that's Ajay Singh of SpiceJet. Incidentally, Qatar Airways has now denied the reports that suggested that they were in talks with SpiceJet. Qatar has in fact maintained that it continues to be interested in Indigo, but Indigo on its part maintains it's not interested in selling a stake. The M&A watchdog has slapped a 420 crore rupee penalty on Hyundai for anti-competitive practices. This follows the 2,500 crore rupee penalty imposed on 14 auto companies last year. Ashmit, who's been tracking those developments, joins us now with the details. Ashmit, the 420 crore rupee penalty on Hyundai, what is this about?
Well, again, at this point, what we find is that the Competition Commission, again, going back to its earlier stance that we saw in 2014 and charging these companies with quote-unquote anti-competitive practices, and in doing so, slapping a penalty of 420 crore rupees on Hyundai. At the same time, a cease and desist order being given with respect to Hyundai, Reva, as well as with respect to Premier. Essentially, just to remind our viewers, in August of 2014, the CCI had slapped a penalty of 2,554 crores on 14 auto companies. The charge at that point was anti-competitive practices with respect to spare parts suppliers, and that appears to be the position in this case as well. Of course, what makes this case different, however, is that Hyundai already has a petition pending before the Madras High Court, whereby they have sought to challenge the jurisdiction of the CCI to probe this matter to go beyond the original mandate, and that's a concern. That would be a legal concern here going forward. But nonetheless, the sum and substance of the CCI order is that Hyundai, along with the other two companies, were acting in a manner that was in violation of the Competition Act. That too, they abused their dominant position with respect to the spare parts suppliers to retain and to shield their own after-sales repair services market. That's the contention here. Of course, one looks ahead with respect to the options. The primary option that is, of course, available to them is to appeal against this order before the Apex Court, but one would have to be wary of the proceedings in the Madras High Court, as a matter is already pending where they have challenged the question of jurisdiction. That's for a later date, but for now, they're definitely staring at a big penalty of 420 crores. Back to you.
All right, Ashmit, and as you were pointing out, the matter is sub judice, and that's why the South Korean car major has issued a statement saying, and I quote, "We reserve our comment on this matter as it is pending before the Honorable Madras High Court." So not much coming in there from Hyundai. Now, India's 11th president, missile man scientist and a writer, but he didn't want to be known by any of these. He wished for his identity to be his calling, his true love to be a teacher, and for 83 years, APJ Abdul Kalam lived up to that dream, and today a nation is mourning his loss. His body is at his Delhi residence for people to come and pay their last respects. Hundreds are lined up on the streets outside President Kalam's home for one last glimpse of the people's president. As per his family's wishes, Kalam's last rites will take place in his hometown of Rameshwaram in Tamil Nadu on Thursday at 11 a.m.
He was not an institution, he was a message, basically, And that message is, for the young children, for example, yes, I can, yes, we'll do. For Indians, we can make impossible possible. He charged entire India. He inspired, ignited all minds, including people like me. Of course, he was a great scientist, a great technologist, but he was a great leader of people. As they say, he was the president, but he was people's president.
He is extremely hardworking, and in fact he would always spend and as a model to the people who worked with him, he would be the last person to leave the laboratory after locking, making sure everybody else has left before that. And he would, and when you start working in space, you realize that not only you have to be humble, but you also have to be extremely strong, because there will be failures, and there is no way you can achieve success in the new science and technology unless you are willing to face failures.
As a president, I think the very description of him as a people's president, Janta ki Rashtrapati, that shows how he touched everybody's heart in this country during his tenure as president. His endearing approach to the children, to the youth, was something to see for oneself's education also. And I remember what encouragement he gave to the boys and girls, how his dream of India 2020, developed India of 2020, that could sort of touch everybody's heart, and people came so convinced that they always promised him that we shall try our best.
Well, the legacy of the people's president. On that note, it's time for us to wrap up this edition of India Business Hour. Remember, it's going to be a crucial FOMC meeting, and stay tuned to CNBC TV 18 as we get you all the updates. From all of us here, goodbye. Many thanks for watching.